Hey guys, before we get started, I just wanted to say that I really appreciate all the support this channel receives. The number of views each video gets and how active the comment section is truly amazing. Thank you. I am now trying to improve the number of thumbs up or down each video receives, because I've noticed that they never come close to matching the actual video views. If you enjoy my content, it would really help my video rankings in the Google and YouTube search algorithms to hit that thumbs up or down button. I don't monetize my channel, and any advertisements you see are from the copyright owners for their content that I use. So your thumbs up will really make a difference for the video's search rankings, and it would be greatly appreciated. Again, thank you to all who support this channel. There are three major reasons for precious metal stacking. 1. To retain and store our personal wealth. 2. To provide a hedge against inflation and protect ourselves from the impending collapse of the US dollar and the resulting global monetary reset. 3. To achieve a status of being debt-free and no longer being a part of the fractional reserve central banking system's debt slave society. Here are a couple of sobering facts. What a single US dollar could buy in 1913 would cost $24.90 today. That is a 96% devaluation and a 2,390% rate of inflation of the US dollar since the Federal Reserve came into existence. 3% of all US currency exists in physical form, such as Federal Reserve notes, otherwise known as dollars, or coins. 97% of all US currency only exists in computers alone. Fiat money is debt, plain and simple. A silver stacker has realized this and also realizes that precious metals are an asset class that still possesses a recognized value that exists outside of the central banking fiat debt system. A silver stacker is someone who chooses to no longer be a debt slave to the banks and uses the accumulation of physical precious metals to become free of the banker's bonds and segregate himself from a worthless, failing fiat monetary system. And cryptocurrencies can also achieve the same goal. Banks do not control the creation of cryptos. Banks cannot create a fractional reserve system with cryptocurrency. The blockchain technology just doesn't work that way. All of the fees and interest payments involved with practically every aspect of the banking system are all but eliminated. Cryptos don't require a third-party financial institution to handle or process our currency requirements. Cryptos are designed to function as peer-to-peer or one-on-one transactions. No more middleman taking the needless cut in order for two people or businesses to conduct a financial arrangement. It Mind-boggling how society has become so accustomed to these exploitive financial practices and continue to accept it. The fact that precious metals and cryptos are outside of the bank's ability to charge us ridiculous interest rates and fees for any services they may offer means that both of these asset classes can provide a value of wealth which are directly controlled by its owner. More facts you may be interested in knowing. Usury is defined today as the practice of making unethical or immoral monetary loans that unfairly enrich the lender. Originally, usury meant interest of any kind. A loan may be considered usurious because of excessive or abusive interest rates or other factors. No denomination of the Christian Church has ever condoned usury. Historically, in Christian societies and in many Islamic societies even today, charging an interest at all would be considered usury and classified as a sinful act. Are you aware that the US and EU, as well as many other countries, have enacted the bail-in law? As a result of the aftermath of the 2008 financial crisis, Congress passed the Dodd-Frank Wall Street Reform and Consumer Act of January 2010, opening the door for bank bail-ins. This act authorizes the Federal Reserve, the FDIC, and the Securities and Exchange Commission the authority to take federal control of bank holding companies and large non-bank holding companies to prevent these financial institutions from becoming a burden on the taxpayer, as was the case with the 2008 and 2009 bailouts. But what this means is if your bank goes bust, then the bail-in authority can vaporize the savings of its customers and assets of its bondholders, compensating them with worthless shares in the resolved institution. You have no say in the matter because when you deposit money into a checking or savings account, that money no longer belongs to you technically or legally. It becomes property of the bank, and the bank just issues you what amounts to a IOU. The bank considers this to be an unsecured debt. Did you know that the Bankruptcy Reform Act of 2005 states that during a bail-in, the derivatives counterparties are given preference over all other creditors and customers of the bankrupt financial institution, including the FDIC-insured depositors? This means that trillions of dollars of derivative payouts will have to be resolved before your checking and savings accounts will be made available to you. And that's assuming that the institution and the FDIC even have any funds left over to do so. After the 2008 financial crisis, the FDIC fund went $8.2 billion in the hole. FDIC is funded with premiums from its member banks, and it is those banks who had to replenish the $8.2 billion fund deficit. When the US dollar collapses, what banks will still be standing to pay your FDIC-insured claim? Let's take a moment to understand the meaning of a counterpart or third-party derivative risk. According to Investopedia, counterparty risk is defined as the risk to each party of a contract that the counterparty will not live up to its contractual obligations. Nearly every aspect of your financial life has some form of counterparty risk. For those who own any kind of real estate, especially income-generating real estate, you have a third-party risk. The unfortunate reality is that no one in America owns a home. Whether your mortgage is paid or not, if you don't pay your property taxes, the government or the bank they sold it to can and most likely will eventually seize your home. However, there are currently two asset classes available to the common citizen that carry zero counterparty risk and are considered a reliable store of wealth and value and are exchanged all over the globe. They are the physical possession of precious metals and cryptocurrencies. Cryptocurrencies are considered a zero third-party risk as long as the internet is up and you have your cryptocurrencies in an offline wallet and only you have possession of the private key to access your wealth. Gold and silver are much more recognized and established as a store of wealth. However, cryptocurrency is growing in popularity very fast, is definitely more transportable, and has the liquidity to be converted into other cryptos, fiat, and, best of all, more precious metals. Oh, and cryptos are lighter too. In summary, physical possession of precious metals and properly secured cryptos are the only two practical asset classes without any third-party risk, meaning that when the US dollar collapses and the global monetary reset occurs, any wealth you have outside of these two no third-party risk assets will be in extreme jeopardy and will most likely depreciate to near zero in a very short period of time. Now take a moment and just let that sink in. Think about any investments you currently have: savings accounts, certificates of deposit, money market accounts, and other interest-bearing accounts offered by banks, treasury bonds, annuities, stocks, mutual funds, ETFs, UITs, even real estate that you do not own outright or you are using as income property. All of the value of these assets will begin to disintegrate before your eyes, and there will be very little that you will be able to do about it when the financial crisis occurs. You will be scrambling to convert your wealth into cryptos and precious metals along with everyone else all at the same time. Exchanges will be overloaded and offline due to the massive volume that they won't be able to handle. Every source you have for precious metals will be sold out within hours. So now, what are you going to do? You really need to ask yourself that question and make sure that you have an answer that you're satisfied with. I hope this video has been helpful to you in some way. Here's a question. What percentage of your wealth value is denominated in fiat dollars? Do you think that the renters of your property are going to be able to pay their rent if the US dollar collapses and they do not have any form of precious metal or crypto wealth? Let me know in the comment section below. A big thank you to all who support this channel. If you enjoy this content, then please be sure to hit the thumbs up button. If you are not yet a subscriber to the Silver Torch 66 channel, then go ahead and hit the subscriber button. Then don't forget to select the notification bell so that you will be notified as soon as I post up new content.